We have with us Sandeep Garg now, MD of Welspun Enterprise, to talk to us about how the quarter has been and, of course, what we can expect from them in the second half of the year. Hi, Sandeep. Good morning. Thanks for joining in. Sandeep, let's start with the numbers on the face of it. Net profit has declined 11% despite revenue and EBITDA growing quite sharply. Can you share with us what were the reasons behind this drop in net profit? Was it only impacted due to losses from discontinued operations, or is there more to it?
Thank you, Samina. Thank you for taking me on this call. I think you're right that it is whatever drop you see in the profits is only because of the discontinued operations. However, if I were to look at the H1 in terms of the FY25, the revenue has grown at consolidated level at about 25%. The EBITDA has grown at 20%. So that's what is meaningful. The profit from the discontinued operation is notional because we are holding that JV or that company held for sale purposes once the approvals are in place. So it is notional. It will come back as soon as the our equity is sold on that JV.
It's a fair assumption for us to believe that that will be then normalized in the next quarter, or am I getting ahead of myself here?
So, Samina, it may take a couple of quarters for us to sell, but it will come back. So this is just a notional loss at this point in time.
Right. Sandeep, also on the margin front, margins have come in 16 to 17% guidance for this quarter. Is this because impacted by seasonality, elections? You want to just share some thoughts on that?
So, see, the overall guidance for the year is about 16% at the 16 to 17% at the console level. The seasonality plays its own role because in the Q2 there is some drop because the revenues are slightly less. The other thing is that it also depends upon which project is turning the maximum revenue in that quarter, because each project has its differentiated EBITDA levels. So it's a complex equation to solve for, but at an overall level, we believe that on a consolidated level, we will be an EBITDA 16 to 17% for the year FY25.
You know, let's talk about the order book and pipeline. The current order book stands close to 15,200 crores, and with a target of 70 to 20,000 by the end of FY25. You want to share with me details about what will be the nature of these projects and how will they contribute to the guidance that you're setting out for yourself on the revenue front?
So if we were to look at the order book at this end of September, it is close to at a consolidated level of 15,200 crores. We are L1 on one project of about 1,850 crores. We are also expecting to bid for BOT toll projects on transportation sector. We are also bidding for a few water projects as we speak. The traction is also coming on the order book because we are looking at smart ops, which is the new technology that we offer that should open up a lot of avenues for the order book. So these three things plus the tunneling, because we are very focused that on the tunneling, which the strength comes from Welspun, Michigan, that we believe that these orders guidance of 17,000 to 20,000 crores is achievable.
You know, your order pipeline is also very healthy at 50,000 crores in the medium term. Now, in the second half of the year and maybe FY26 as well, what percentage of this pipeline do you expect to convert into actual orders?
So as you can see from my guidance, that we believe that we'll be closing at about 17,000 to 20,000 crores. So and the consolidated income guidance is somewhere around 4,000 crores for FY25. So we expect that in the period to come, we would be adding something like about 4,000 to 7,000 crores of order, depending upon how the government takes decisions. So that's what my guidance would be, that anything between 4,000 to 7,000 crores will be targeting the orders going forward in the next 6 months.
So that would be the second half of this financial year. Okay, that's good to know. So it's about 10%, over 10% of the order pipeline should be converted into actuals. Water segment constitutes 63% of your current order book. You want to tell me what sort of projects are driving this growth, and what does that do to your margins in that sense? Is this part of the orders healthier margins than, of course, say, tunneling in that sense, or roads?
So I think definitely the water is more healthier margins than the roads. Tunneling is better at the EBITDA level for sure, because that's much niche area, and that's something which contributes better than any other business that we are looking. And the smart ops, which is the another element that we are adding, should give a much better EBITDA as compared to any other thing. So I think in terms of our focus, is to move into niche areas which give healthier returns than what a simple road would give. So we are not getting into road in a simple road business. We want to be in the BOT, which we believe that will give differentiated value. So this is what our strategic calls are, that we want to be in tunneling and transportation, as well as in utility. We want to be in water treatment and water segment and transmission. And we want to be clearly in a one-stop shop for all the water needs, whether it is domestic, it is industrial, or it is municipal. So that's the kind of positioning that we are creating for ourselves. We believe with our association with the world leaders like Veolia and Xylem, and our association with Smart Ops, we should be able to offer solutions to every need on water segment.
Sandeep, you're retaining your revenue guidance of 20 to 25, 22% for FY26, FY27, and also is there a good chance, because everything seems to be working for the company right now. Of course, there are elections, there could be some delays, but those are transitional in nature. Do you think there's a good possibility that you may over-deliver on the revenue guidance?
So I would stick with my guidance here. It is better to, exceed rather than disappoint. So I would stick with the guidance rather than making any other statement.
Well, also, I think we've highlighted most of the aspects of the business. But what I also want to quickly get a check on you, of course, you maintained your guidance on the revenue front, and I think I'm just going to need a little bit more. 16-17% on margins out of the FY25 going into FY26-27, then could there be an improvement on the margin picture, you think?
So we will look at it for sure. If the new segment of smart ops and tunneling really kick off, there will be a better margins. But I would, for this moment, retain the 16-17% guidance, because I think let's get the orders in, and then we can actually talk about better improvement on the margins going forward.
Investments in the oil and gas sector, how significant is this sector for Welspun Enterprises growth? Are there any new developments or projects in the space that you'd like to tell us about?
So oil and gas has been it's a legacy vertical for the Welspun Enterprises, and we believe that all our assets now are what we are looking at are commercially, economically viable. That's what the finds have, the exploration has has demonstrated to us. So we believe that it's a matter of time when once the regulator approves our proposal of the field development plan, that we would be in a position to really announce that how this whole oil and gas piece is going to land in next few years. The clarity should come in our next 6 months or so. So it is important because we have invested some money, but it is not hugely, moving the needle at that level, at the current level that we are in our operations.
You know, you mentioned to me in our conversation as well that you are evaluating road projects from select state and local agencies. You want to shed some light on this and tell us what are the how do you identify which and what you're evaluating? Is it because there are better margins? Is this because there's better delivery, or just simply put, better foothold in those states?
So three things that we do when we are identifying a project is, number one, the first thing is that can we effectively deliver that project? So that's something, do we have the ability to, because these are longitudinal projects, do we have the ability to manage the complexity of a longitudinal project in that state? Or do we have a construction partner who can manage it? Second thing that we do is it going to be highly competitive? Because we don't play in a very highly competitive environment. Number three is it going to meet our profit line expectations that we have? So on these three criteria, we have a three-gated process for a bid, and a very clear guidelines as to what we will bid and what we will not bid. So this gives us the ability to target the projects which we have a reasonable probability of winning, and we have a reasonable probability of hitting our profit margins expectation as well.